Chapter 9.1 Tax Return. In this chapter, you can learn about tax return, tax period and due date, as well as salient features of tax return. Let us understand about tax return. Tax return needs to be filed by a taxable person. That is, any person who is registered or who is liable to get registered for tax purposes as per UAE VAT law, and who makes a supply of taxable goods or services or a deemed supply excluding exempt supply. If they are liable to get registered as per the UAE VAT law, then they have to file the tax return. Now let us understand about the contents that should be there in a tax return. Tax return should contain the below details such as the name, address and tax registration number of the registrant, the tax period to which the tax return relates, the date of submission of tax return, the value of the standard supplies on which we charge tax and output tax charged as well as collected, the value of imports, zero rated supplies, exempt supplies, supplies to which reverse charge applies, input tax credit amounts and related expenses, total due tax and recoverable tax for the period, as well as the payable tax for the period. So all these details should be there in a tax return. Tax period. Tax period is a specific period of time for which the taxable person shall calculate and pay tax. So tax period means the period for which we are filing the tax return. Standard tax period is a period of 3 calendar months, and at the time of allotment of the tax registration number, the tax authority will specify the tax period to the taxpayer. Mainly, taxpayers are classified into 3 groups. The first group, the quarter ends as on January, April, July and October. And group 2, quarter ends as on February, May, August and November. And the third group, for which quarter ends as on March, June, September and December. So like this, there can be a classification of taxable persons by the tax authority for filing tax returns. Change in tax period. Sometimes the authority may assign a shorter or a longer tax period to a taxable person. The authority should feel that it is beneficial or necessary to do such a change. It can be for reducing the tax risk of tax evasion, or improving the monitoring of compliance or collection of tax revenues, or to reduce the administrative burden or the compliance burden. So considering all these factors, the tax authority can change the tax period for a particular taxable person. And the taxable person can request the authority to change the tax period assigned to him whenever the taxable person feels that there is a reasonable situation to apply for change in the tax period. Due date. There is a due date for filing the tax return. Normally, the tax return has to be filed quarterly within 28 days from the end of that particular quarter period. And for large businesses, the tax authority can advise them to file it on a monthly basis. Example, return for quarter ending 31st March 2018 can be filed before 28 April. And if it is a large business who has to file monthly return, the return to be filed before 28 February 2018 for January month. Let us also understand that final return means the return to be filed after cancellation of registration. So it is a last return to be filed. Then, if there is any excess tax paid as per the tax return, means where recoverable tax exceeds the due tax, the same should be refunded to the taxable person. It happens when the input tax is more than the output tax. In that case, in tax return we can mention the tax to be refunded, and that tax authority should refund that tax to the taxable person. Salient features of tax returns. There are various features you can note down. The first thing is the filing should be done online through FTA portal. Means the government maintains a federal tax authority portal. In that portal we have to file the tax return. Then supplies made in each emirate needs to be conveyed. We have to mention the supplies happened in each emirate separately in the return. Then, if the return is incomplete, it will be treated as the return is not filed as well as not accepted. Then, late filing may be subject to penalty. If you didn't file the tax return before 28th, that is a due date, so in that case you have to pay the penalty also. Then, e-dirham is specified as the means of settlement of payable tax. So the government specify e-dirham mode for payment of tax. Government entity may be required to file a simplified tax return. So tax authority can mention a simplified tax return for government entities or such notified entities. So these are the various salient features of tax return. Corrections. The taxable person is responsible for accuracy of the tax return filed. Whenever there is an error in the previous return filed by a person, he should immediately correct the error. The taxable person should disclose the error to the Federal Tax Authority within 30 days of becoming aware of this error. So, the first point is the taxable person is responsible for accuracy, and secondly, whenever any error is noticed, the same should be disclosed to the tax authority within 30 days. And he should include the details in the tax return to be submitted immediately after noticing and correcting the error. So it should be mentioned in the tax return that he is submitting immediately after he became aware of such error. So corrections can be carried out, and any error should be informed. It should be corrected by the taxable person immediately. So this is the end of the chapter 9.1 tax return. Hope you have understood various points related to tax return. Thank you.